Hey guys, welcome back to the channel. I'm Nitin Gupta. I work for a hedge fund. I'm really appreciative of you for clicking on this video. I'll try to make sure that I provide as much value as I possibly can through this video. We'll talk about Sezzle. We'll look at some data, web traffic data, app data, other social app data to see why Sezzle is seeing such a huge growth and whether or not I believe this growth can continue. We'll try to model next quarter's earnings as well based on the data that we have, and I do believe that this stock is potentially going to keep going higher, and I do believe $160 is very much in sights here very closely. So I was a value focused investor before. I've turned into a social app investor, and the growth that I've seen in my portfolio personally over the last 12 months has been nothing short of remarkable for my own for my own account, and that's why I've switched my strategies. So I used to be intellectually right, and that's what I used to be focusing on in the past, but recently I've switched more towards data driven and social arb insight trading. So and that has really helped me out, and that's what we'll do with Sezzle. I do believe there's going to be headwinds that the stock is going to see over the next 12 months to 24 months, but in the short term there's a lot of money to be made in these companies that are seeing the robust growth, especially in fintech and like other SaaS based businesses, and Sezzle is like going crazy in terms of the data, and I do believe that it's going to be great. So we'll talk about the the fundamentals of the stock, and then we'll look at the data, and then we'll try to project the Q2 earnings as well. So first of all, I'm going to go through this earnings presentation here. So the main reason for Sezzle's growth recently has been the fact that most of their customers are Gen Z. So Gen Z generally don't have too much of a credit history. So you'll see here the US FICO distribution of 49 million adults don't have a good credit score or are unscorable. So here is where BNPL, buy now pay later companies come in, and the exposure, total market for buy now pay later is actually going quite higher as well in America, and it's a very small percentage compared to other developed nations in the world. So a lot of the US Gen Z customers, which is basically the core of Sezzle, they say 48% of them have been rejected at least once for any credit. So the US average FICO score is 715. For Gen Z, it's less than that, and that's why they don't get loans. They're not able to get credit cards and everything else, and that's why they have to go to platforms like Sezzle, which are sometimes the only places where they can actually get any sort of credit. So the growth has been from merchant partners, as well as from mods, as well as from on-demand features that we'll talk about in this video. So the merchant partners, basically how this works is you can go on the app and use any of the vendors that are partners with Sezzle, and you can just buy something and you don't have to pay right away. There's multiple ways you can pay. You can pay in 4, which you have to pay $25 right away, and then every 2 weeks you pay the remaining. And then they're trying to partner up with they're trying to launch other payment options. So payment in full, pay in 2, pay in 5 is something in beta that they're also planning to launch, and this might be successful as well. So one may ask, why would you use pay in full? The pay in full feature is for people who want to build some sort of a credit with Sezzle. So the Sezzle knows that, well, this person has bought 10 purchases worth $2,000, and they are they're a high value customer. Their average order value is quite high, and they have a history of paying $2,000 right away. So that means that the risk of default with this specific customer base is going to be less. So that kind of builds credit history technically in the Sezzle's app as for the users. So the biggest reason for the success for Sezzle right now, last month as well as last quarter, as well as in the next 2-3 quarters going forward, is going to be the launch of the on-demand feature. So how the on-demand feature works is you can shop any brand with Sezzle. So that never used to be before. You have to be restricted to a limited amount of places where you could buy. The risk of default was higher because Sezzle didn't have a direct a direct platform, or a direct partnership with certain vendors. And if you don't have a partnership with the vendors, you can't really do anything with that. So now what happens is you can actually you can activate a Sezzle virtual card, and then you can actually use that. Think of it as a gift card basically. Sezzle gives you a gift card. You pay 25% upfront. You get the 75% left over, and then slowly and gradually you just pay it off over the next 3 payments or something. Plus, what the Sezzle does is they charge you a flat fee for that transaction as well. So that helps them quite a bit, and then they get 5 to 6% kickback from the vendor itself, and then they have WebBank, which also pays them to provide this loan to them. And this WebBank partnership is the primary reason, because what has happened with the WebBank partnership is now Sezzle has kind of transferred some of the risk over to WebBank. So earlier Sezzle was technically the loan agent, where they were the ones who were actually writing this loan, to to the customers. But now what WebBank does is WebBank takes some of that risk, and WebBank is like the underwriter on these loans. Sezzle transfers over the risk to WebBank, collects the interest from WebBank, and WebBank is partly also responsible for these loans. Now this is one thing that I think is like a point where it gives you like a proof of concept for Sezzle, and kind of tells you that Sezzle is not a fraud, quote unquote, because they have like association with the bank, which is well established. So a bank like WebBank would not have established a partnership with Sezzle if they would have thought that they were a fraud. There's some operational risks, there's some execution risks as we go forward, there's some regulatory risks as well, but this is one thing that has really helped them. With WebBank, they can underwrite more loans. The risk profile has gone down, because if Sezzle only had say like $1 million to write loans for, they were quite restricted, because if they don't get the money back, if they don't have ample amount of reserves, they cannot write those loans. But with WebBank, they have this huge pool of capital that they're leveraging to write those loans. And then the on-demand feature, which has allowed them to go to different vendors at the same time, is also helping them quite a bit, because it's increasing the mods, so the monthly on-demand and subscribers. So earlier Sezzle used to report only subscribers, but with this on-demand feature, now they're doing this as well. On-demand is quite interesting, because now they don't have to be restricted to the number of vendors where Sezzle customers can shop at. They can go to like different places. As you can see, Q3 2024 we were at 529,000. Q4 went up to 707. Q1 2025, generally Q1 is a seasonally weak quarter, because it's after the holiday season, but still the growth or like the retention here has been pretty decent as well. The other important metric that for Sezzle, which is quite interesting to see, and this kind of proves my point about the vendors. So you'll see the number of transactions has gone up significantly. The number of unique merchants is up 2x. Over last year. So people are not using Sezzle only at certain vendors, they're basically using them everywhere, and that is the reason why this company has done so well recently. And the repeat order use is almost like unprecedented. It's 96%, so 96% people come back and make a trade, or like not a trade, but like make a purchase. And also the frequency has gone up, so more people are using Sezzle for more things besides just shopping consumer goods. And that's the other reason they're able to capture more of a person's spending habits and more of the larger pie of their spending. And this has been the primary reason why Sezzle has been growing significantly. Excuse me. So yeah, so this is like the GMV is also going up. And now I'll look at some stats. So I guess the gist of this is that this WebBank partnership is helping them quite substantially, and also the fact that you can actually shop outside the vendors that are directly set up with Sezzle. They can actually just expand the pool of vendors that they're working with, and this is the primary reason why this company has been seeing the kind of robust demand that it is seeing right now in terms of the gross merchandise value. So this is the search trends for Sezzle. As you can see, they are going up exponentially. During this time last quarter, they were flat to down. Obviously this was the holiday season, so you'll see this huge surge which happened here as well, and then we had a little bit of a die down from January to March, but then from April onwards we're seeing this huge surge, actually almost equivalent to this last like Q4, which is generally the busiest one. This is the website traffic data. As you can see, the website traffic data is also going up substantially. This is the best quarter they've ever had. The guidance in the last earnings call was not substantially high, so the fact that they're doing this is quite nice to see. And then this is the app data. As you can see, the app data also looks quite good, and this directly correlates with the revenue as well. So this is something else to watch out for. The iOS app data also is looking very strong. As you can see, the GMV this is like the GMV trend over the last 2 years. This was showing some sort of stagnation here, and even like Q3, as you can see, this was like a little flat here, and that's why the stock was kind of starting to go down a little bit. And then Q4 2024 we had this huge surge, and then this was a little flat. Now my estimation for the next quarter, for Q2 2025, is the GMV is going to come at 930 to 940 million. This would be significant. Like this, the magnitude of this is not well defined in the market right now, and the growth rates will go up actually. So if this number is actually true, the growth rate quarter over quarter is going to be accelerating. And Wall Street, let me tell you, loves these type of stories, and it gives a premium for these type of companies, like substantial premiums. And then as you can see, this is the mods chart. So the mods chart is going down. So this mods might actually be higher again in the upcoming quarter, and this should help them out as well. This is my only concern when it comes to Sezzle, is the active customers. So active customers are the people who have shopped at with Sezzle over the last 12 months, and this number has been going down and has been flat. So as you've seen, the vendors has been going up, the number of transactions has been going up. The only problem here is the same people are making transactions at Sezzle. There's like the inflow of new customers has not been there, and that could be a problem for them going forward. Like if the current pool that they have, if they maximize all the purchases, like say if a person spends $1,000 in general in a month, and they've already spent like $700, $800, that pool of revenue that they have for that specific customer, the ARPU is gonna go. There's not going to be much room for it to grow from that point onwards. Now, if if new customers are not coming into the ecosystem, then they're going to have a point where they're going to get stagnated again. That quarter is not Q2. That quarter might be Q4 or Q1. Q4 will probably be busy again, but next year, like you'll start seeing deceleration at some point if they don't take care of this. So this will be the most important metric I think if Sezzle stockholders should be looking at, because if the consumers don't grow, then they'll get to a point where it gets just a stagnation, and that would be a big problem for them. So this is my estimate for the revenue for Q2. I'm going to open up another web sheet that I had created for doing the valuation as well as the net income analysis for this quarter. So with a take rate of 13%, it's a little high because the take rate could actually go down this quarter because of last quarter was just exceptionally good, and that's what the management had told us. So this is my analysis as to like what I think is going to happen in Q2. So projected revenue, according to me, for Q2 is going to be $112 million. The market is estimating $94 million. The projected transaction related costs at 35%. So this is what the management told us, that this percentage is going to come in at 35%. It was exceptionally high in the last quarter, and that's why we saw this huge net income leverage, operating leverage that they had in Q1. That might not be there forever. It could be, and if it is, like that would be an extra bump in net income. But even if you were to take a conservative 35%, projected transaction related cost would be around about 40 million. Non-transaction related operating expenses, I took it at 25%. That's also based on management guide. So we're coming in at 68%. Or 68 million, sorry, for the total costs. Projected operating income will be 45 million. Income tax would be around 11 million, and you're looking at a projected income of about 33 or 34 million dollars. The first quarter was at 35 million. So if this scenario plays out, the EPS will come in at 93 cents. The estimate right now is at 58 cents. So I'm saying that the share price right now at $133 and an EPS of $4.50 gets you a PE of 29.56. So the market or like the management has said that the EPS for this quarter is this year is going to be $3.25, and they were saying that Q1 was seasonally strong, or not seasonally strong, but like they had an exception because of some tax refunds received by the customers. So that's why we saw this huge surge. And there's also the revenue takes time to roll in because like the purchases that were made in Q4, people are paying it in Q1, right? So that's why we had that surge. But as we have seen from the alternative data, Q2 seems like the underwriting is going to be even better, and like with the WebBank partnership, they have some crazy operating leverage, which we are seeing. So my conservative estimate for this year for their EPS is 450. It could get higher than this when they report earnings in Q3, and we could be looking at like $5 for EPS this year, and that puts the stock at 26-27 times earnings. So it's not cheap if the momentum continues. Now that's a big if, because this stock, as I said, like it's already pricing in a lot of growth, 30 times earnings with $4.50 of EPS. If that EPS was around $3.50, then the math completely changes, right? So that's something I would say if you're an investor in Sezzle to keep an eye on. The active consumers is a very important metric. If that doesn't grow, then we could be potentially in trouble. So that's something that I'll keep an eye on. Like the app data is going up quite substantially. So if we see a significant increase in mods, like say 750, 800,000, the market is going to take that very positively. And if that does come through, there's a good chance that the active customers might actually increase by $50,000 or 50,000 people or something. So that's a metric that I would keep a very close eye on and seeing how that works. So the mods are important, but also I'm not sure if like that could sustain, because mods is anyone who's made a transaction, and they used to report subscribers before, but they completely got rid of the subscribers metric and they shifted to mods, which is anyone who's made a single transaction. Subscription is a little more sticky revenue because you get paid no matter what. Mods is also not a bad thing. So there's some cannibalization potentially from people moving from the subscriber tier to a mods tier, who's someone who's just made a transaction, but you actually get like a flat fee from every mods like transaction made by the mods from the customer itself. Because on a traditional transaction, you only get a take rate from the vendor as well as the web bank, the interest that you earn. But in this case of in case of the on-demand customer, you're actually getting $8, $9, $10 flat fee from every transaction, plus the 5 or 6% from the vendor, plus the interest. So this is actually playing out for them, especially with the number of transactions going up. This is helping them substantially. But as I said, this is going to be very, very important to look at, is to see if the web traffic data, if everything else keeps going forward. The primary risk, as I said, is active consumers. The other risk potentially could be regulatory. So there could be some regulation around their ability to write loans to weaker consumers, and there is also macroeconomic risks. If we see consumer spending slow down, inherently they would have a big problem. The other thing that I think is a major risk as well is potentially for MasterCard, Visa, and Amex to get into this specific sector and then take people away. So the thing is, 48% of the customers are customers who are not going to get that credit anyways. But it'll be interesting to see with Visa and MasterCard and Amex, who are seeing some negative sentiment around their stock, where people are talking about stable coins taken away share from them as well, and then that's why the stocks have been under pressure recently. So that's the other thing, where they might also see this as an opportunity and might want to get into this more, and they already have the rails around the system. They can easily just exploit or build a good product around the system and do really well in a very short period of time. So that's another thing that could potentially impact Sezzle. But in the short term, it looks like the momentum is going to be great. And as I said, I used to be a very intellectually focused person. I don't know if I should call myself intellectual, but what I mean is I used to be the arguments used to be around value and what would happen if there's so many risks, there's no moat, so there's no real advantage to these companies. I don't want to invest in this company, and due to that, I let go of a lot of opportunities in the short term that could have made me a lot of money, but I chose the intellectual argument over the investment argument in the short term, and sadly the investment has become that recently, and you have to take advantage of it. Either you you can harp about intellectual facts and not make money, or actually take advantage of these short term momentum earnings momentum stocks and make money from that. So that's my thesis. It has changed. I know some people will still not agree to it, and I completely get it. I was where you are, but I think in the short term this company could do really, really well, and the stock could be a 2x in come December, and that's not an exaggeration, because you've seen what Dave has done, you've seen what AppLovin has done, and there's n number of stocks recently that have had that, where Wall Street gives them a significant chunk of they give them a lot of credit for the earnings momentum, and then also the multiple expands. So you have earnings expansion as well as multiple expansion, and that is the best case scenario for any stock to go up, if you have earnings expansion as well as multiple expansion, because that will so every time the earnings could keep on beating, your PE gets smaller, so you actually end up pricing something that's going to go up in revenue at 80-90%. You have to give them that type of PE as well, right? And as long as that momentum continues, the stocks can go at a PE of 40, 50, 60 plus a little bit more, because you're just pricing in the growth. And these stocks also attract a lot of momentum traders, so that also acts as an extra demand factor for these stocks. And if the melt up scenario does continue, if we do think that quantitative easing is going to keep on going up and interest rates are going to go down, that could be another huge thing for Sezzle, and they could continue to do really well over the next 6 to 9 months. And next thing you know, you've missed on a 2x or 50%, 60% return in a very short period of time. And I don't want to do that. And I am quite certain, I do understand that the stock could actually drop 50% tomorrow with a short report or some sort of something that'll come out, and I'm completely okay with that risk, because my position sizing is such that I wouldn't lose sleep if the stock goes down 50% tomorrow. With these type of companies, you have to build a basket of these type of companies with convexity, which you think can go 2x, 50%, 2x, 3x, whatever, and then position it in a way that even if one of them or two of them or three of them play out, then the whole basket is kind of taken care of, and then all the extra 50%, 40%, 30% are your incremental returns. And these could do really well. And as I said, last couple of years, I've done really well with these type of names. I've gotten out early, quite early with some of them, and I don't want to do this again. And the data was saying that there's still momentum in this, in the earnings in a company, but I just thought the multiples were getting crazy. I kind of left a lot of money on the table. I don't want to do it again, and I hope you guys can take any advantage from this as well. By the way, 80% of the people watching this video are not subscribed, so please subscribe to this channel, guys. It just gives me a lot of motivation to create more videos like this, and I really appreciate you watching this one. I'll see you in the next one. Take care. Bye.